While investors are nervous by how much debt AbbVie is taking on to make the Allergan deal a reality, there may not be too much to worry about. Even previously bearish analysts such as CitiGroup's Andrew Baum have changed their ratings for AbbVie from a sell to a buy after considering AbbVie's post-merger financial projections for the upcoming years. However, AbbVie's share price seems discounted at present, with its promising new drugs getting overshadowed amid these debt concerns. But the future looks bright for AbbVie in terms of both revenue growth and an increasing dividend. But that will soon be tested as the third quarter 2019 financial results for AbbVie will come on Friday, November 1st, before the market opens. So let's check in and see what the charts are doing. And we're looking at the monthly chart on AbbVie that goes back to 2013. The symbol is ABBV. For disclosure purposes, I do not own any shares of AbbVie at this time. There's only a few things to look at on the long-term chart, and that's beginning here with the price chart. It has this lower level trend line through here that's fairly decent, regardless of the move up here in 2018 and then the ultimate decline to this point here. But it bounced off of that trend line somewhere, say, in the lower 60s, and we're now at $74.75. So if you bought here at the low, then you're in a good space. If you bought anywhere through here, well, you're going to need some time. Let's move on down to the MACD, and this is pretty much the only other thing I wanted to look at other than that trend line. And this is the fast line and the slow line here. And I've talked about this in the past, and we'll keep talking about this until the formation resolves itself. But when you have a fast line that peaks like that and then moves in a very sharp, hard fashion in a downward trend like this, and it creates all of this separation between the fast line and the slow line that needs some time to repair. And that's exactly what it's doing. It's going sideways. So it's going to have to continue to travel sideways until it starts to get within reasonable reach of that slow line, and perhaps things will turn and turn up and through. Now, of course, easy money has been made from this point on for sure, but it's not all of the money that can be made. Now, personally, it's just my own strategy. I like to wait, for the most part, for the MACD, the fast line, to cross through the slow line. That's my trigger point. But when you look at the other oscillators, such as the histogram, price rate of change, relative strength, they all look fairly good. They all look that they've had a good basing bottom and an upward move. Fast lines running through the slow lines. So each of these oscillators looks good. I'm a little bit more conservative. I just like to wait for that MACD, the fast line, to cross through the slow line, and that's going to take some more time. But while that is healing, my opinion of what's going to happen with the price is that the price is going to, say, trade sideways, perhaps within a channel, something like that. I don't know for sure, but time has to elapse before the price can actually really take off. That's what that MAC is telling me. At least in the history of other stocks and indices that have shown these sharp downtrends, unless you have an absolute situation when the market hits a bottom and there's really good reason for it to start screaming back up again, it has to trade sideways while it heals. So there's a lot of doubt out there still with AbbVie, primarily because of the debt that they've taken on. Not everyone is convinced. And so investors are going to trade this thing sideways for the most part. That's what I think the greatest probability is for AbbVie at this time. Trading sideways within a general channel, it actually might start turning a little bit positive in a channel, maybe in an upward fashion, but it's not going to make a lot of progress until that fast line closes close to and then through that slow line. Something can always happen, maybe at the earnings announcement. Maybe they're way ahead in paying off that debt, or they're way ahead in earnings and revenues. Something can always happen. But for the most part, the stock right now is going to trade sideways, more or less. There's going to be some volatility to it, but it should trade sideways between a channel. Right now, the channel is going to go sideways. Perhaps it'll turn and maybe go slightly upward. But time needs to elapse before that fast line closes in on the slow line on the Mac. So now let's go take a look at the weekly chart. And now we're looking at the 2-year weekly chart on AbbVie. And what pops out here is a formation that, let's wait. I'll describe that here in a second. Let's first look at the oscillators. Looking at the Mac, we've had a pretty good base and then a pretty good run. It doesn't look like it's quite done yet with that separation between the fast line and the slow line, but at least through the histogram, it looks like it might be starting to slow down just barely. So let's see that slow down, and let's see if that's going to actually reverse here and start coming down this way. And again, that's not bad. I think that's just normal trading. Once the stock gets over the shock of the information of the buyout and people start getting used to it, it's going to start trading more normally. And I think that we're hopefully starting to see some of that. Looks like the price rate of change is still heading up to that zero line, which is good. Relative strength had a little bit of a topping process there as well. So something like the histogram. And then the stochastics, there's no stopping that yet, but it looks like the Williams did have a bit of a topping process there. And this sawtoothing can occur up in this area for some time, but at least it does show that the evolution looks to be a little bit more normal. Now let's go back up here to the price chart. What I'm looking at right here is interesting. And we've talked about this type of formation before many times, and it comes from Investors Business Daily, or IBD, and basically it's a cup and handle. So here's your cup, and then here's your handle. Just a very short, small handle. So that's the formation it looks like it's trying to evolve into. We'll see. We'll see how that works out. Here's your trend lines, that channel that I think it's going to trade within for a while. But let's watch this handle progress. It needs more time to it. I would say perhaps a month, maybe a little bit more. And it is going to be an interesting earnings announcement because that, depending upon what comes out, that could change the whole thing. But right now, it looks like it's forming this little cup and handle, and that's a good formation. You've heard me talk about this before, where the price sort of trails off very slightly, while the volume also trades off very slightly. And those are the last investors that are giving up on the stock. You want them out because once you have them out, then you can start heading back up. So that's what happens. The price trails off down this handle, and then it starts to increase slightly again on the way up. And it gets to this point here, the top of the cup there, it's like a trigger point. So once it gets to that point, IBD likes to wait for it to pop above that, and then that's their buy point. Mine is the Mac. IBD, they look for that cup and handle and that trigger point being the top of the cup here. So watch that formation occur. And hopefully that will take, say, maybe a few months. That would be a very healthy cup and handle. Again, depends upon what's going to come out on November 1st. So stay tuned. And for ChewDog charts, thank you.